right, so we got to record it. So yeah, I've been trading. I think this is like my 5th year trading. When I first got started trading, they didn't have anything like what you guys have today. So there weren't any companies, there weren't a lot of traders online or anything like that. It was literally, I found a couple people posting about it, and then this guy Garrett, me and him were real cool. Me, him, another guy, we all kind of got together. We kind of started like this Forex group, and it kind of grew to over like 1,000 people. Long story short, that ended up forming like a lot of different groups on social media, and then companies started coming after that. So like for real, our first couple of years were like really rough because we didn't have a lot of resources, but we knew the type of money that could be made. So we kind of wanted to stick with it. So that's basically like how everything got started. All right. So if you are new, just know that no matter how rough it is today, 9 times out of 10, if you really see the vision in trading, you will still be trading a year or 2 or 3 from now. It's what you really do from now, going forward. Like try not to get caught up in hype and people just posting like crazy screenshots and stuff like that. Oh, 1 second, guys. Give me 1 second so I can mute the line. 1 second.
Hey, you got Christopher and TMO. You got background.
Okay. So everybody should be muted now. All right. So once again, I just want to let you guys know, if you're new to trading in general, don't give up. Don't get the shiny syndrome where like you're just jumping or letting people bring you over outside of what it is you're currently doing, because trading is really just all about consistency, really. All right. So basically what I want to go over on this webinar is I just want to break down just the basics of what Forex is, what indices are, because you'll see a lot of people trading different indices right now. Different brokers and what brokers are, the trading platforms that we use, how to kind of set up your charts. We're going to go over like calculating risk to reward, profit and loss, and then we're going to talk about the candlestick patterns, which is basically what you see on the charts, and then different trading zones, which is basically different areas that you want to look for, all right, when you're identifying on a chart. And I want to actually, it's not all going to just be PowerPoint. I want to go to the chart and actually show this to you guys, all right? And then I'm going to talk about news events and the momentum of the news. One thing there I want you to just to understand, it's not about sitting in front of like a TV and watching news or anything like that, okay? There's a website, I'm going to share it with you, and there's like specifics that I look for when it comes to news, and I'm going to kind of share that plan with you guys. And then like lastly, they're going to have a trade plan, and there's a trade mentality. So everybody's trade plan is going to be different, which is another reason why I said, don't worry about what the next person is doing when it comes to trading. You have to know what your goal is, what your plan is, and you have to have that like written down somewhere. And it's best to put that like right above wherever you're going to be trading. So every day, you can remember to take a look at that. And then just having the right mentality when you come to the charts, clear mind, not letting distractions get to you, not revenge trading, things like that. Okay. All right. So for me, this is me on a vacation. So once again, I told you guys I got started about 5 years ago. The thing that hooked me was I took my first account, was like $300. I think I took it to about somewhere around the $1,500 range. And literally like, I want to say a session and a half or so, I was up on a London session, about New York or so. I had that account, over $1,000. And I was like, whoa, this is crazy. Like, so when I saw that, I knew the power behind it. All right. I did end up losing that later because I really didn't know what I was doing. It's just something that happened. So that's one thing I want you guys to know. Like, you want to have consistency when trading. All right. It's not going to be about having like one crazy day and then just trying to like keep repeating it and repeating that, because that may be too much risk. All right. So I tried to buy courses as they started to come out and just trying different things, making money, losing money, getting frustrated, all while going to work, doing insurance. So when people say they don't have enough time, they just have to make that time, because I literally, didn't sleep. I probably slept about 5 hours, and I just dedicated certain hours during London session to trying to trade, waking back up at 7 a.m. to get to work at 8 a.m. And you just have to make it happen. So eventually, through me doing everything, right, having losses, different strategies, I started to find like a style that worked for me. Okay. And don't be afraid of losing in trading, because you're going to learn from the losses. Like next time you come to a chart, you're going to say, oh, I remember a setup, that went against me. Maybe I'm not going to hop in that setup so fast this time or so quickly this time. All right. So the main thing for me, guys, when it comes to trading, I'm not spending much time on this, but I have a family. I'm not like the flashy person. I don't really care about anything flashy. I really just like traveling and, kind of having some time freedom to do what I want. And that's what I knew Forex could provide. So whatever it is for you, just remember that, write that down. And that's the goal you're going after. Okay. It's not necessarily going to be the money. All right, so this was just some pictures of us traveling. All right, we went. This picture was Vegas with the team. This was Colombia, Bangkok, Phuket, Thailand. Toronto, Bahamas, Los Angeles. So just different stuff like that. I just want you guys to kind of get to know me because depending on where you're coming from, you probably don't know who I am. All right, so now just to kind of jump right into everything. And if you guys do have questions, you can put them in the chat, and I'll kind of either stop if it makes sense for me to stop, or I'll come back and go over all the questions a little bit later, okay? So the foreign exchange market, just basically, I'll read this for you first, but it refers to, all right, Forex refers to the foreign exchange market. It's the over-the-counter market in which foreign currencies of the world are traded. To make a long story short, what it means is like if you guys go to a different country and you exchange like your US dollar for the Canadian dollar, there's a value, right, that's going to change, that there's a value difference. All right. And what we're doing is we're not physically going to these countries and exchanging money. We're just doing it virtually through our platforms. Okay. And if you were to take $1 or $100 to Canada and come back with the same $100 a month later or a week later or a day later, the value in the currency might have changed. So you might make less or more money. And then they also charge you to exchange that money. So there's like the middleman. All right. And that's kind of what we're doing. We're just able to do it from our phones, okay? So as you can see down here, like this is the rate. So if you see like on the charts, you'll see normally 5 digits to the right. So like 1.11084. I'll go over these numbers a little bit for you guys on another slide, but this is basically like your exchange rate, okay? From the Euro to the USD. Now you'll see that on different pairs. If you're not a numbers person, don't let this scare you either. Like this is gonna be very simple. There's tools to help you calculate the differences, and it's just basic math most of the time, right? So indices is basically like your stocks or your Dow Jones, the NASDAQ. So the NASDAQ is international. There's companies in the NASDAQ all around the world, all right? So any type of news event could affect those. The performance of companies could affect that. US 30 is similar, all right? It's the top 30 companies, and they actually kind of move similar. So sometimes when you're trading, you can look at both of these, and if one might start to move before the other, maybe the NASDAQ starts to drop, right? And the US 30 hasn't dropped yet. It generally will follow each other, but they don't have to do it at the same time. These actually pay out really, really well, but they're on the more aggressive side. So for like a new person, I wouldn't start out right away trading indices because you can make a lot of money very quick with like a small balance, small amount, but it also could be the opposite. You could lose a lot as well. But indices are very, very great once you get a good strategy that you can bring over there from just regular Forex currency pairs. Now, when I was talking about the spreads and the exchange rates, that's this picture that I'm going to go over. But first, I want to talk about the brokers, all right? So the Forex broker allows traders access to the foreign exchange market, all right? The Forex broker allows clients to trade with very substantial leverage, meaning you can have a small account. It's like they're loaning you money, right, to be able to trade in this big market that's now $6 trillion, all right? But when I say loan you money, it's not like you're going to owe them anything. You can trade a $100 account, right, $50 account. Which are good for getting emotions while you're learning. Like I like trading with a small real account versus a demo. So like what I recommend for new people is you start out with the demo on your strategy and everything and kind of get used to the charts, which buttons to press, right? What to look for. Then you have to get the emotion down. And that's where I like to do small accounts, like maybe a $50 account or a $100 account with a very minimal lot size, just so you can see the value of your real money fluctuating. So there's different brokers, and I'll talk about that on another slide. And the person that introduced you to trading might have recommended a broker, so you could go with their broker as well, okay? As long as your broker is paying out, which most of them do, and they have a wide variety of currencies or cryptocurrencies you can trade, that's kind of what I'm looking for, okay? Now, when it comes to trading a pair, this is what you'll see on your chart. You'll see, like, for instance, the Euro USD. The Euro price right here, so you have 1.0661, all All right. And then you have 1.0664. So you'll have like a sell price and a buy price. The difference in between, which you see is 3 points, that's your pip. So the fourth digit is your pip. So 1, 2, 3, 4. All right. And you guys will learn about this in your trainings. Now, when there's a fifth digit, all right, that's called a pipette or a micro pip. All you have to really remember is that like there's 10 micro pips in one pip. It's just like basic math. So 3 points or 3 pips would be the spread difference. So if I were to enter a trade, all right, I'm automatically going to be negative the 3 points or the 3 pips. You always start that way because that's how the brokers make their money as well. They make it on the spread, okay? Now, I don't want to go too much into detail about this, but I will show you guys how on the chart you will profit from the pips. All right, now brokers, there's a bunch of different brokers. One broker that I really like is called Hugo's Way. They have a $10 minimum deposit. Not that I would ever really recommend doing $10, but they have 500 leverage, which allows you to do a smaller account, you know, and be able to still make some income as well. Minimum lot sizes, all right, so it's 0.01. And they have currencies, they have stocks you can trade, they have cryptos, and they have indices. So I like this particular broker because you don't have to worry about maybe moving money from one broker to another because the current broker you have only has currencies, and now you see it set up on a stock or an index or a crypto, and you don't have money in that broker. So I like this particular broker because of that, but check with the person that invited you or got you started in trading. They might have another broker for you. They also have simple deposit and withdrawal methods. A lot of brokers right now just use like Bitcoin or cryptocurrency deposit and withdrawals. It's a pretty simple process. If you're new to that, honestly, you could YouTube it, or the person that kind of introduced you to Forex should be able to walk you through that as well, okay? So this is one of my favorite right now is Hugo's Way. Now, your trading platform. And all this is kind of in steps. Like once you have a broker, you're going to get your trading platform. Your trading platform, Metatrader 4, is where you can actually have it on your cell phone and you can have it on your computer. This is where you can log into your broker account and actually take trades. This is where if you have $100 in your account, it will show up in your Metatrader and you can actually go in and place trades. All right. Same thing on the mobile app. You would log into this and be able to take trades. You'll actually be able to see the charts, right, moving real time, and you'll be able to set up your analysis that we'll go over as well right on this chart. Now, TradingView, I like it because it's smooth, it's clean, and they have it for mobile, they have it for the computer. It's a little more like user friendly when you're trying to mark up your charts. So what I normally do is I do markups on TradingView, and then I come to MT4 when I'm ready to actually place that trade. Now, I do have a couple screenshots just to show you. So this is what the Metatrader 4 platform looks like on your computer. If you're new, don't let any of this intimidate you. Honestly, all of this stuff is pretty simple. I've marked off the main things that you need to know. So like these will be your candlesticks, and you'll be able to go in and change the colors if you want. If you want to enter a trade, there's a bunch of different ways. You can enter the new order button. You can click the one-click trading button right here. You can right-click. So there's a bunch of different ways to get in the trade. Your lot sizes is where you change it. It'll be right in the middle, right there. You can just click in there and change your lot size. And then you have a chart time frame. So like, can't really see it, but it's like 1 minute, 5 minute, 15, 30 hour, 4 hour, daily, weekly, monthly. What that means is each candle is going to be that time frame. So if I'm on a 4 hour right now, that means it takes 4 hours for one of these candles to actually form, okay? And then over here, you have your currency pairs that I was talking about. So whichever pairs you want to trade, this is where you could open up the charts. Now, there's a lot of pairs, and you don't have to worry about trading every single pair. One thing that I like to tell people is find like 1, 2, maybe 3 pairs max that you can start to just watch those pairs and find the movements. Because if you're looking at too many pairs, you're going to get confused. You're going to possibly miss out on trade setups. I've been there before where, you know, I saw something on one pair that I wanted to take. I get caught up scanning other pairs. Next thing you know, the one I was looking for already left the station. I would have made money. Now I find myself chasing on another pair, just trying to get the money I thought I should have made on the other one. So I like to tell people, you know, just get like 1, 2, 3 main, you know, pairs, and just try to master those pairs, because that's really all you need. Okay. Now, trading view, here's trading view. All right. It's the same type of thing as far as charting, but it's a little different. You have to get used to it. You can change your symbols here. Okay. This is the time frame where you can change the time frame. You know, you have your candlesticks. And then on this side, you have all your tools for charting. So if you want to draw horizontal lines, diagonal lines, Fibonacci, squares, anything, right? Anything you draw on this chart is for you. So don't let somebody look at your chart necessarily, and they don't have to understand what you marked up, right? Because that's for you once you start to really grasp how you want to trade and how your strategy will be. Another thing is you can have a watch list where you can save your pairs. Like if you see over here, I had the US 30 saved, the NAS 100, and the Euro USD. Sometimes I see people with this whole thing full and they're just going through looking for stuff. All right. If it works for them, I'm not going to tell them not to do it. I'm just recommending for you new people to kind of start with less. All right. So that's your two trading platforms. All right. So now what I'm going to do is just pull up a chart. So give me 1 second. And in the chat, please let me know if you can see the chart. I have to make sure it pops up. Can you see this chart? You guys can give me a yes, a one, just anything. Okay, yes. All right, cool. All right, so basically, this is where I like to start. Now, this is gold. XAU USD is gold. I actually already had some stuff marked up from last week when I was trading gold. And as you can see, like the lines that I had, like literally, this was from last week. When they came through, I want you to see how they had a reaction. You know, I'll get to this, but how they had a reaction like right on one of my lines. So when you're drawing stuff like this, the tools are over here. So you can click the little arrow, and here's where you find more tools. All right. If you want, you can go ahead and click the star button if it's something that you're using all the time, and it'll put it like on one of these little things. So everything I use is pretty much here. If I want an arrow, then boom, there's an arrow. All right. And then you can just delete it. All right. You can change the color. So if I put a line here, you can come in here and change the color, change the thickness, you know, whatever you want to do. This is why I like it. It's also easy to kind of like move the chart around, squeeze the chart in, or move it, you know, side to side. And you and on MT4, Metatrader 4, you really can't do this and kind of move it how you want. And that's another reason why I like using TradingView. All right, here's the watch list over here where you can add it. So like right now, currently, these are my pairs, GBP, which is the Great British Pound USD, Euro USD, USD CAD, Gold, and NAS 100. Okay, so this is pretty much it. You'll come here and you'll start marking up your chart. All right, and when I'll go over different things that I look for in just a few slides as well. I just want to go over the actual platforms first. So let me go open up the Metatrader platform. All right, here's Metatrader. So as you can see, this is where you'll actually take the trades from, but this one isn't like as clean. I can go back and forth, you know, and I can squeeze it like this over here, but it's just really weird to me. So I literally only use this to place my trades. Now, here you can have your pairs, so you can find your pairs here. So ECM pairs, you know, here's some energy pairs. So this is actually Trader's Way. So this one doesn't have crypto. It doesn't have indices. All right. So that's one of the things I was telling you about, getting a broker that has everything that you want. Here's your time frames, and then here's your tools in here. So here's the line there. Here's your straight line. And then if you want any other tools, you can right click and go to customize, and then you can pull up stuff from here. So if it's something in here that I wanted, then I can just click on it, insert it here, and then it'll pop up right in here. So as far as taking the trades, like I showed you, you can change your lot size here. So you can just, whatever it is. All right. And then you can click buy or sell. And then what else? You can right click, same thing. All right. So just play around with this. If you do set up, like you come into properties and you set up like certain colors and a certain way you want your chart to look, save that template so you don't have to do it for every single chart. Right. So you can go to right click, template, save, give it a name. And then the next time you open up a chart, you can just go to templates, load, and get your template right back up. All right. So those are the two platforms. Unfortunately, I can't share my phone to show you the mobile MT4. So we'll just kind of move on from there. All right, so I want to talk about risk to reward. This is very, very, very important. All right, so risk to reward when trading, you do not have to be a 100% trader. You don't have to be an 80% trader. You don't have to be pretty much like a 60 or even a 50% win ratio. You can still make money if you are consistent with the right risk to reward. I'm going to break this down on a few different slides because everybody looks at this a lot differently. So I want you to get it. All right. So the ideal risk to reward is at least a 1 to 2. Right. Meaning if I'm going to risk $1, I want to at least make $2. Okay. This is an example of like a 1 to 4. 1 to 4 would be great, right? If I'm risking $1 to make 4 or $100 to make 40. Okay. You're not just taking a trade and just putting a risk that you want to look like you're willing to lose. That's not how this works. I'll show you guys. You don't just get in the trade and say, okay, I only want to lose $10 on this one, so I'll put my stop loss at $10. If you do that, your stop loss will probably get hit every single time. There's a specific area that you want to put your stop loss, all right, and your take profit. So when you're looking at the chart, you're going to look for at least a 1 to 2 potential trade or better before you take it. So in this case, if you're risking 1 to make 4 and hit your target, great. In this case, if the target is right there and you're risking 1, but the ideal place to put your stop loss is $4 away, then you just would not take that trade. An example would be, let's say the entry that we want to take our trade is this black line, but you get busy doing something, or you're looking at another pair and you come back and the price started to move and now the price is up here and you still want to jump in that trade. You're not going to do that because your ideal stop loss is bigger and now you have a bad risk to reward ratio. Another way to look at that is a chart right here. This was a pair that I sold, a Euro Canadian trade. So basically I was looking for it to break out of a zone. Already knew that I have my stop loss actually set on a lower time frame, but for the purposes of this, if you look at where my mouse is at the 149906, and if I had a stop loss above here, all right, if I could draw this and I had to take profit down here, you could see that would at least be like a 1 risk to 2. So the size of the risk, I could get double that on a potential take profit on that trade, which you can see the price started to move down. Okay, so that's what you're looking for. Now, another way to look at it is just monetarily. Remember, if you can come to the chart and just grab a certain amount of pips, right, every single day, right? You don't have to look at somebody who says, oh, I got 1,000 pips today or 1,000 pips this week. Hey, I don't really care. I want 20 pips and I'm happy. And here's why. If you come and get 20 pips, right, it's all about compounding. So let's just say you have $5 on a 1 to 4 risk to reward. You're risking 5 and you're going to make 20. Now, the only thing you do on the next trade setup is you increase like your lot size so that you can make more. So now you're risking 10 so you can make 40. You're risking 20 so you can make 80, 100, 400. Now that can be the same trade. It could literally be like a 20 pip trade once a day, and you're just increasing your lot size and increasing your risk to reward there. And this is powerful. Like a lot of people don't even make over $200 a day at work. So imagine if you get up to like $200 a day or whatever it is, only on 20 pips, because you know exactly what you're looking for, right? You don't have to go chasing the market for every move that it does. Now, this goes over the risk to reward again to just show you that you don't have to win every trade, right? So with the proper risk reward, you can actually lose more trades than you win and still be profitable if you are consistent. So in this example, we're doing a 1 to 2 ratio with $1 risk, $2 gain. So on 10 trades, on 6 losing trades, you're going to lose $6. On 4 winning trades, you're going to win $8. Your overall profit is $2. Like, that's a win. Like, I don't care how you look at it, that's a win. You lost 6 trades, you won 4, and you're in profit. It may not be the profit you want, but you're not negative. Okay. Now look at the other side of that. If you have better trades and you start to find trades that are better than a 1 to 2 risk with the same dollar amounts. So now you could make $6, right? If you have 1 to 3, maybe you always look for 1 to 3. So you could potentially, do these numbers right here. $6, $10 if you go 1 to 4. Maybe you have 1 to 5. There's people who have 1 to 5 ratio trades. It's just, what do you want to do? And having a minimum of a 1 to 2. All right. And then So I don't have this. I'm sorry about that, guys. I'll try to get you guys this calculator. Basically, it helps you do the risk to reward, but I'm going to skip that for right now. Real quick, any questions on risk to reward, or if you guys are liking this so far? I mean, is this good information for you, whether you're new or not? If it makes sense, just drop something in the chat, or if I'm going too fast. Let's see. Yes. All right. Okay. Appreciate it, guys. Just let me know, and I'll keep going. All right. Appreciate that. Now I want to talk about candlesticks. So let me just recap real quick. You guys should have on your notepads. You should have your information about your broker account. You should have your information about your trading platform, right? After you get your broker account. All right. You should have information about risk to reward, why it's important. All right. And now we're going to go into some basics on candlesticks. Now, this is one thing I overlooked when I got trading. I was like, oh, I know what a candlestick is. You know, it's not that important. I'm not going to worry about it. And honestly, for like a year, I probably missed out on a lot of, you know, growth in trading because I overlooked just candlesticks. All right. So basically, they tell the story of where price traveled. All right. There are many different type of candlestick patterns. Some are more important than others, at least to me. Where the candlestick pattern forms in relation to like support and resistance, which I'll show you, is also important. And then where the wicks of the candle actually like fail to close, that's a good indication of what might be happening. So what we have here on the candle, say for instance, this is my up candle, the green one. The price opened here where the body of the candle is. It closes where the body of the candle is. So this is a 1 hour candle. This candle can go up and down and up and down and up and down. But if it closes here, all right, that's where it closes for the hour. Now, this wick shows me how high it went, right? This wick shows me how low it went. But these are the open and the close. Same thing on the downward candle. You're going to have a wick of like how high it was. Maybe this candle was green at one point because it was going up. And then it came back all the way down, solid red, and then it pulled back and closed right here. And now you have a downward candle. That's simplicity behind reading a candlestick, okay? All right, so now I'm gonna go over a few basic candlestick patterns, and then I'll show you a few of like my favorite candlestick patterns. And there's a ton of them. I'm not going through all of them. I just want to show you guys, all right? Now that you know what a candlestick is and where the open, the close, and where it has traveled, you can see what's going on these candlesticks. So for instance, an engulfing candlestick is this one here. It shows momentum. Basically, the market opened up and it opened up down here and it went all the way up and it closed up here. Now it could have fluctuated up and down for an hour, but when it closed, there was no wicks. It just pretty much opened and closed. That's momentum in the market. That means that more than likely the buyers have control right now. Okay, so that's a good candle when you see it in a certain formation on the chart to know, okay, this is a great possibility that the market will probably keep going up, right? The hanging man, this pattern is basically formed at the bottom of a downtrend. So like the market is dropping, and then like the buyers push it all the way up. So this candle was all the way down here at one point, but it closes like all the way back up here. Now you'll start to see maybe 2 or 3 of these type of candles forming right next to each other. You'll see these long wicks. Basically, just imagine somebody down there pushing something back up, pushing something back up, pushing something back up. It doesn't want to let them get down there. So that could be an indication possibly that the market might start to turn around. The Harami is a good candle. I like this one. It's kind of like an even wick on both sides and a nice body. And then you have shooting star, which is the opposite. You might find these, these candles show basically like, I don't know. It's like if it's up, it depends. If you have it up, like in your chart has been going up, and then you have it's the opposite of the hammer. Basically, they're pushing down. All right. If you have that candle, it could also come at the bottom, and it could also indicate a reversal. But you're going to remember that you're going to put together multiple candles most of the time. You're not just going to take a trade off of one candle. All right. And then you're going to look at some other confluences as well. But when it comes to these candles, just look at the basics behind it right now, like where they're opening, where they're closing, and where the wicks are. All right, is the wick at the bottom or are the wicks at the top? And now a doji, which looks like a plus sign, it may even have a little body. This basically just means that maybe for an hour, the price didn't move. Like the price was just sitting there, like literally, like just not moving. And that just shows that there's either no volume in the market or it could be a potential for a reversal as well, okay? And you're going to study, like, depending on what you guys go through, you're going to study those candles a little bit more in detail. And I'm going to try to find some on the chart for you. Now, a couple of my favorite ones is like the morning star candle. It's a 3 candle pattern. So basically the market is dropping, dropping, dropping. I see this big drop here. You get a doji little candle in the middle, and then it's followed by a nice green candle, right? This 3 candle pattern is a morning star. It happens at the bottom, like on support. When I see this a lot of times, I'll enter a trade, right, with my stop loss below this area. Now, one thing I will tell you, when you see like a 3 candle pattern, maybe a 2 candle, but like a 3 candle pattern, it's normally a better pattern that you could take, a better confirmation. And if it happens on a higher time frame, it's even better. So imagine that each one of these candles were 4 hours, like it took 4 hours to form. Another 4, that's 8 hours, right? And another 4, that's 12 hours. Like 9 times out of 10, if this was a 12-hour pattern on support, then this will be a good buy to get your goal, on your pips. Now, this could also be good on a 1 hour. Now, on a 15-minute, you just have to be careful, because 15 minutes, it's way more candles, right? So the chart can be going like up and down a lot more. Now, over here is just the reverse. If you find this same pattern at resistance, like at the top, then it's the same idea. You see a solid candle, a little doji candle, and then like a big one coming down here, then the momentum might have switched and you might be able to grab your pips towards the downside. So I like those. And then I like tweezers, which is basically, long wick candles with little bodies. And railroad patterns is one of the first patterns I learned when I was trading. I thought this was all I ever needed. But this is basically a 2 candle pattern where you have, either one going up and one coming down. You would find that like up high at resistance. And then that could indicate a sell for the next few candles. All right. You could also have it where it's one red candle down, one green candle, meaning like you find it at support, which could also mean that it could possibly go back up. And then just remember the time frame. On a 15-minute chart, that might not do anything for you, right? On a 1 hour chart or 4 hour chart, a railroad could be a better confirmation. All right. Oh, and this is just more on an engulfing candle. So basically an engulfing candle is when, let's say the market was dropping, let's say it was coming down, all red candles, and then you have these little candles like this, followed by a big green candle, right, upwards, that basically the bodies of the candle covers up the entire candles. That's called engulfing. It basically engulfs everything over to the left. It could also be the opposite coming down. Maybe you have a bunch of small candles going up, green candles, and then you get a big red candle engulfing like the last 2, 3, 4, or 5 candles. That's another indication that price might be reversing. Okay, so I don't want to spend too much time on that. That's basically the basics behind it. So let's go ahead and just pull up TradingView real fast, and let's see what we see. All right, so I'm on gold right now. This is a 4 hour chart. So as you guys can see, like right off the bat, you can see this candle right here. You should already know what that is. All right, that's your doji. So you have a candle with 2 wicks. You see the wick on the top, the wick on the bottom. It's a very little body candle. So that's a doji candle, and it's coming in like right at a resistance point. So we'll talk about the zones next, but that's what you like to see, especially like if that's on a 4 hour. All right, this was a nice bullish candle. See how that 4 hour candle pushed up really strong? I want you to take notice of like the wicks as well. Do you see like this long wick at the bottom, how it's down, wicking the support? See, price didn't break it. And then you see all these little wicks from price go up, let this long wick down here, and price went up. So a lot of people were selling this market because this candle was actually solid black. And that's just because I have my colors black, but it was solid black at one point. And a lot of people down here might have gotten sales, and then they didn't wait for that candle to close. The candle closed back up here and left you a wick. So if you're patient and you wait for a few more candles to come, you start to kind of get an idea of where that market might be going. All right, so that's just like a basic way to kind of see it. Here's another one. Let's come over here. All right, so do you guys see this one? Pretty much another doji, right? And it's really no body. So for 4 hours, this candle played around, but it closed exactly where it opened. All right. And then if you look at the pattern in general, So let's just mark this up right here. Let me empty this. All right, if we look at this pattern in general, all right, that was like on a 4 hour, it was like a big evening star. All right. The only thing with this one is it's so big, you know, there's probably not a trading opportunity on that. And then it left this long wick here. So there's some other confluences that I would look for, like maybe the time of day. Was this a news event that had momentum and different things like that? Okay. You have an engulfing candle here that just engulfs all these candles. See that one? You have a railroad here. Remember, I told you sometimes the railroads don't work because if you look at this this railroad candle right here, it kind of came up short. Like it looks like a railroad, but it's kind of higher, so it kind of came up short. And then you didn't really get a good trade. You didn't get a sell-off right there. This is an engulfing candle. This blue one, right? You see how it just kind of engulfs all this stuff. As soon as it engulfs that stuff, you know, look what happens. You get a black candle that tried to drop, and they pushed price all the way back up. So that's like 2 reasons why you could just hop in this buy on that particular trade. And even if I did hop in that buy, I would just put possibly my stop loss below that wick. Because if price didn't break that, then 9 times out of 10, they don't want to break it. All right. And that's getting a little ahead of myself where I would drop down time frames and look a little deeper. I just want you guys to see like the basics behind what I'm looking for with those candlesticks. All right. So I'm going to hop off of that. I hope that helped you guys actually seeing some on the real chart. Feel free to drop something in the chat. Just letting me know. Let's see. And we got over 50 people on this call as well. All right. I see some yeses in the chat. Yes, yes, yes. All right, guys. I appreciate it. Let's keep going. See, we're at 37 minutes, so let's keep going. All right, now trading zones. I already kind of hit on trading zones a little bit when I was just showing you guys my lines on the chart. But basically, they're known as a few different things, right? It could be supply and demand zones, support and resistance zones, maybe an order block area where price kind of bunched up and stopped a bunch of times, and you can see that price hit it multiple times and just doesn't want to break it, right? So the easiest way to find these zones first, especially if you're new, is to do it on a line chart. You can also do it with just the candlesticks. I'll show you both ways when we get to that. But the line chart will probably be one of the easiest ways. And then what you do, let me see if that's the next slide or not. Yeah, okay. So what you do is you can mark them off on different time frames. So remember, some are stronger than others, right? So let's say you have it on the monthly, the weekly, the daily, the 4 hour. You don't want your chart to be too clutter, but you wanted the information there so you don't forget. Because if price hits a monthly area that it hasn't hit in months, 9 times out of 10, there's going to be a reaction. Same thing with the weekly, same thing with the daily, right? And then a 15-minute or a 5-minute, zone might not hold water. It might not really matter. It just depends, okay? So I'll show you how to actually draw those, and it's going to be up to you to do it the best way that works for you. So now we're going to bring the charts back on, and I'm going to show you guys like how I do it. So let's empty that chart. Let's close out of this. All right. So real quick, let me just show you what you can do. So first thing I do is I like to start a higher time frame. Maybe not so much the monthly. I mean, you could do like a weekly, but I'll just start at the daily. So these are daily candles. Each candle takes like a day to form. The only thing I'm trying to do is just get some information. Looking at this right now, especially if you're a newbie, like you really don't know what you're looking at, right? The only thing you probably can tell is that the market overall is going up, right? It is overall going up right now. So what I would do is come over to my lines, and let me go to the line chart just to show you guys, because I think it's easier. All right. So now you see the close. So you could just go like this, right? So for instance, this was a good area. I can see where it bounced twice off of here. It broke below it. It bounced off it, broke above it. It kind of played around. So I like that particular line. You could always put your highest line, like that's the highest one right there. They don't have to be perfect, right? And I could look down and maybe I'll go right here because I see this one before it came up here. So just on the daily, I don't have to put too many because it shouldn't travel that far that fast, right? Some days with crazy news it might, but overall it's not. Now I left these red for my daily. Now I can go down to like a 4 hour. All right, you see it starts to get a little more crazy, right? So now I can start working within the range of where price is. Price is inside of this range right now. It's not inside of this range. So I want to see what could happen up here possibly. Like where could price go? All right, so maybe I'll draw, I just want to look for points where it connects. So look at this one. I'll change the color to orange for my daily. You see how price got here and it dropped, it got here and it dropped, it bounced on the other side of there, it played around a lot right there. So, all right, if price gets up here, I probably want to start to take a look at it. All right, so that's my orange one. I could probably, put one like in here somewhere. And it don't have to be perfect, remember? Why do I like this one? Just because I see a lot of action here, some action here. Now it broke through here strong. So if price were to come back to this area, I may want to take a look at it and just see it could do that, right? That could be a potential trade. I mean, I don't know yet, but you have to just look at it, mark it up, and then you'll see what makes sense. Don't rush a trade. You'll always have time to get in. All right, so now what I'll do is I'll go down, let's say to the hour. All right, let's see what we got on the hour. All right, so you got like this area that it kind of broke out of already, and I'll just change that color, I don't know, to blue. All right, so you can see like the multiple hits here, hits here, hits here. So, okay, what if the price could actually drop even into this area before potentially coming here? All right, so you're looking at different things. So if I first want to see it hit, let's say one of these lines on a pullback, what's called a pullback, the next thing I would look at when it gets down here on the actual candlesticks, right, like this, is the candlestick patterns. I want to see a candlestick pattern form at that area. Give me some confirmation before I take that trade, right? So like right now on the candlesticks, you can see you have basically a little evening star form. There was a nice little breakout. So whenever, we break out, we want to see a pullback and then another breakout. So right now there's no trade, you're just waiting. But you have to know that potentially you could get a nice candle. Now, if it does something like this, let's say price just goes like, just drops, right? That's why you don't rush into a trade. If it just drops like that, then great. You wait for the next setup, right? What could the next setup be? It might start to do this now. But you will mark up those zones to see where did it break? Where does it have to hit? Like, because you want to see what's called retest. If it breaks out of an area, you want to see it test that area. So an example would be it broke out of this blue line area. I would like to see it retest somewhere in here, meaning that maybe some wicks start to form, maybe one of those candlestick patterns start to form that I showed you, and then boom, I can take a trade, right? A safe trade with a stop loss like right in there somewhere. And if it hits that stop loss, all right, cool, that's within my risk to reward ratio. And even if the price jumps down here, you still got out in the stop loss. And now you can start to look the other way, potentially for that trade with patience. All right. I don't want to dive too deep into that because I know I got some really new people on here as well, but I hope, that makes sense. Really quick, let me just show you a different way that you can kind of draw zones. If you don't like to do it with the line chart and you don't like all these different lines, then you can do it with like rectangles. So basically like what I used to do when I did rectangles, what I would do the wick, and I would do like the body on a specific time frame, and I would do that. So ideally, this is a zone, right? You see it hit here and it hit here. All right, so it could either stay on this side and drop down, or like if it busts through it, it could stay on the top of it and keep going up. If you want to just get more data, you can just drag it across, right? Same thing. If you look at my same points of contact, look at where price pretty much reacts. So, like right now, I'm not taking a trade. You just want to see what happens because price could bounce down, right? Because you see all the resistance. If it comes up, then you're patient again and you can wait for, wicks and entries to show you a reason to take the trade. Sometimes the candles and the chart might just move and you don't see a confirmation and you say, oh man, it moved 100 pips, but I didn't see a confirmation. Well, don't take the trade. Don't worry about it. It'll always be another one. All right. So I'm going to hop off of that. I hope zones make a little bit of sense to you guys, like kind of how to start to practice it. This all takes practice. You really need to just do this. Like you don't have to take a trade to do this. Go on TradingView, look at a chart, start drawing boxes, drawing the lines. Where do you think the price is going to go next? And stall or reverse or bounce. If you can do that and then it starts to do it, just see how long it takes. Did it take a day? Did it take 4 hours, 1 hour? And you'll start to know when you're in a trade. Don't worry if you're not seeing any profit for 3 hours. Well, you already know that it could take 8. It could take a day. It depends on if you're swing trading, right? Or scalping in and out the market. What time frame are you on? Is every candle 4 hours? Okay, you know that's like, you know, if you're waiting for a 2 to 3 candle reversal pattern to happen, let me bring this back real quick because I got to make this point. All right, if you know you're waiting for a reversal pattern to happen on the 1 hour chart in here, and you want to see, you know, like 3 candles. So this first candle hit the zone. Are you going to take that trade? No, because you know you're waiting to see 2 to 3 candles, at least if you were going to sell it. So if it's what, almost 9 o'clock right now, let's say this candle closed at 9 o'clock. I pretty much know I can come back at 10 o'clock because I'm waiting for the 10 o'clock candle to close. And I'll come take a look at it. All right, not yet. I'll wait for the 11 o'clock. Like, you don't have to sit in front of these charts. You can just mark up an area, and when it gets there, you know, you come on the hour and then you look at it. So I just wanted to make that point for people who think you really have to be at these charts all day. I think we're almost through this, guys. I know this is a lot of information. I really hope you guys are taking notes. I am recording this as well, and I will post it. All right, so news events. News events is basically, it's a website that I use, right? Most people use, and we want to see important news events out there in the world that might impact the market. All right, I don't care personally what the news event is. I don't care what the results are, honestly. Like, I don't really care. All I need to know is, when is the news going to happen? That's all I need to know. I try to keep this as simple as possible, okay? I don't really care what it does. You'll start to know, like, NFP might move the market a lot. FOMC might move the market a lot. I think a CPI, something like that, or PPI, I don't even remember. But when I see it, I know it. There's specific New Zealand news that comes at like 5 o'clock or 6 o'clock. I already know when that news comes, it's going to move that market. So you either want to not be in the market if you're not experienced in trading news, because it will move fast, or you want to use that to your advantage to know that that's when the market is going to move. Maybe the market doesn't really move for 2 days. You come look at the news and you see that, all right, you're looking at Euro USD, the market hasn't moved Sunday or Monday, but there's a news event on Tuesday at 8:30 a.m. Well, or whatever, Friday. You know that the market is probably waiting for this news to push that market, all right? And that's what a lot of people get caught up in. They jump in trades when the market isn't moving, and you can clearly come to the news and see, look, they're probably not going to move until tomorrow, you know, so just go to sleep, all right? So I think the next screen is for me to go on and show you. Oh, no. All right, so this is to give you an example. So this was a pair where the news event hit. So as you can see, the market's going to go up or down anyway. When the market hit a resistance zone, just like I told you guys, when you get to resistance zones, you want to watch for other candles and patterns. Look at the railroad pattern in there, right? Then news was coming up next. So an experienced trader might know that even though this was a big bullish move, when I got to a major resistance and news was about to come up literally like on the next candle, this was a good sell. Could have put a stop loss right above here, so a very short risk to reward. Your first take profit could have been like this zone. If there must have been some congestion here on why I had this line, but that could have been your first take profit, right? Risk here, reward here. That's at least like a 1 to 3, 1 to 4. But look, news just really pushed that market. Okay, if you can catch that, you can make a lot of money fast. I mean, this could have been a 15-minute candle, right? And if you had a standard and this moved 100 pips, all right, that's a lot of money. It's $1,000. All right, so that's what news can actually do. It can take small candles and give you like big candles. All right. So the takeaways, let me just see what I wrote here. So basically, the market can move aggressive in any direction without any warning or news. Sometimes it'll move crazy and there is no news. Sometimes it'll move crazy before news. Now, the folders I'm going to show you, there's yellow folders, orange folders, red folders. I normally just look for orange and red folders. All right. Doesn't mean yellow aren't important, but that's what I look for. Non-farm payroll is basically the first Friday of every month. You'll see that about 8:30. FOMC is a big one. That is, I think, normally that same week, but it's on Wednesday at like 2 o'clock p.m. Eastern time. Bank holidays are going to be colored gray. A lot of times if there's a bank holiday, like, I don't know, July 4th, Christmas, New Year's, whatever, the market either will be closed, right, because banks are really closed, or it might just be very, very little movement in the market. So you want to get in the habit of checking the news site at least before you start the trading week, like have an idea of what news is coming for your pair, versus maybe doing it before you take every trade, because you might forget. All right, so I'm gonna just quickly open up Forex Factory. This won't take that long, and I'll show you guys, like, you can make an account and just save it. So, all right, this is my account. It should have like your time zone and everything in there, depending on where you are. And the only thing here is I come to the green filter, and so I can uncheck the grays if I don't care, or I can uncheck the yellows, right? And you can just uncheck every pair that you're not trading. So if you're trading Euro USD, then you can uncheck everything except for Euro and USD. And then that way you'll only see news for those pairs, right? That's how you do it. And just click save, and it'll keep it like that. You can also click here in the middle, and you can see the news for the entire week. So today's the 22nd, Friday's the 27th, apply settings. All right, here's the news for the entire week. Today, there's going to be London news on Euro, PMI. I think I spoke about that, 330. I guarantee you, 315, 330, sometime in between here, the market on any pair that has Euro in it is probably going to move. Then at 9 a.m., you have another one. This may, ECB, that might move the market as well. Keep an eye. Then Tuesday, if you're trading JPYs or AUDs, I really look at the red folders, all right? I like to trade the red folders. Sometimes I don't. It just depends on if you see a setup and you are more experienced. But that's all I care about. I don't care about what this really says. I don't care about these numbers. I don't care about what's going on in here. If you want to know, great. I don't really care. As long as you see a setup, if you're a technical trader like me, you're basically trading based off of what you see on the chart. If you're a fundamental trader, now you might care about what the numbers say. You might say, oh, the report came back negative for USD, so I know, all USD pairs are going to be bad. That probably is the case, but sometimes it's not the case. It might spike the opposite way, and then you'll lose, and then they go your way. And then you're like, man, I should have waited till they got to my price point. So bookmark that and keep that in mind. All right. Let's see where we are next. It's almost an hour. We got like 8 minutes. I'm trying to keep this to an hour. How to set up your trade plans. I'm going to go through this really quick. It's basically like what I was telling you. You want to write this stuff down, type it out, put it on your wall. What do you want to do first? I want to open my chart. I want to write out, I want to draw my support and resistance lines on higher time frames, lower time frames, right? I want to look at only 3 pairs. What are those 3 pairs? I want to only trade off of maybe the 1 hour and the 15-minute. If that's what you want to do, you write that on your trading plan. I only want to take a trade if it comes to a support or resistance and it shows me one of these candlestick patterns, or it shows me a candlestick pattern in general. That's a rule. Follow it every time. My risk to reward on every trade is going to be, what is it going to be? 1 to 2 or better? 1 to 3 or better? If it's not, I'm not taking a trade. Maybe you're going to say, I'm only taking 1 trade per day. You could take 120 pip, 130 pip, 110 pip. It doesn't matter. Don't let anybody make fun of you. All right, if you take a 10 pip trade once a day, that's 50 pips for the week. If you get to the point where you're increasing your lot size from like 0.05, maybe 0.010, 0.20, 0.25, over time, let's just say you have a standard, that is $100 a day. That's $500 a week. That is $2,000 for the month of trading. Look at it like that. Don't care what nobody else is doing. All right, you will get there and you will find out what works for you. So that's basically setting your targets and your goals. Somebody said there was a little loss on the news, but this really helped. Okay, I got to kind of speed it up, but there will be a recording. You can kind of go back. Basically, red folders, orange folders on news. There's a time that's going to happen. That means that the market might start moving aggressively in one direction or the other. And basically, like I said, write out the goals. Don't start with the $1 million goal, right? Just think about it like work. Do you work? Did you work? How much did you make? Can you make how much you were making at work trading? Is it $150? Is it $100? Maybe it's only $80. Like, I don't know. Set those goals first. Do that consistently, and then you will find success, basically. I already kind of broke down the numbers, but don't chase other people and what you start to see online and Instagram and all that stuff. This is just more on the trade plan. Like I said, if you have a $2,000 monthly goal, that's $500 a week. That could be 250 pip trades, depending on your lot sizes and stuff like that. Real quick, pull out your paper. Let me show you guys how to do the lot sizes. So generally, it's going to be like this. So if you have a 0.01, all right, so you would do your lot size, write this down, lot size times, all right, the amount of pips that you're going to go for. So if your trade target is 20 pips, like when you see it on the chart, you see 20 pips, you're going to put 20 pips. To make this easy, just always add a 0 for micro pips. This is how I do it. So if I'm doing 20 pips, it's basically 200 micro pips. It's the same thing. But when I hit enter, it'll tell you what you'll make. So you make like $2 on that trade. Same thing if you had a 0.50 lot size times 20 pips, add a 0, hit enter. You could make $100 on that trade. It's also the same for your potential loss. So if your stop loss is 10 pips, you do your lot size 0.50 times your stop loss pips, which was 10 pips, add the 0, hit enter. Okay, so you're risking $50 to make $100. So that will give you an idea of like what lot sizes can get you to your goal eventually and what your risk to reward ratio is. For anybody who's on the call that's going to be hopping on Stevenson's training session, that is going to start at 9 o'clock. And I do appreciate you all for being on this as well. And let me see, I'm not done though, hold on. All right, so recapping real quick. So basically now you guys have the basic fundamentals, right? You know how to actually set up a broker account, get your charting platform, you know what to start to kind of look for, right? You can try this every day for 30 minutes, look for candle patterns, look for support and resistance zones, mark them, mark where you think they will go. Come check it tomorrow, check it a few hours, see what happens. You know about risk to reward, all right? You know how to mark that. Now you guys have the knowledge on candlesticks, you know about news events a little bit. So what I want to do is kind of go through to give you guys enough information to mark down, to write down, to where you could actually say like, okay, do I want to do this, or is this possibly too much for me? Don't get overwhelmed, because while it seems like a lot, it ends up being simple. And then the only thing you have to overcome ends up being your mentality, right? And the consistency aspect.